Hello traders, Cory Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of February 3rd. Go through the same process each week, just helping me assess whether I'm going to be buying stocks, shorting stocks, how aggressively I want to be trading. And this week, as has been the case recently, stock conditions remain mediocre, not horrible, not great, just not ideal. And Bitcoin remains in a no trade zone for me, stuck in a range. There are some watch lists. You can check out the best swing trading stocks watch list. This is for February. There's still the old list on there. It was updated January 15th. There weren't a lot of stocks on there. So I'll be updating that very soon for February, and some other lists you can check out here as well for possibly some ideas. So let's look at how the indices are doing. We're just kind of focusing on the last little bit here of each one of these charts. This is the NASDAQ 100 or the QQQ ETF. And you can see this little downward channel. We broke out of it, still holding above. So, I mean, very short term, longer term uptrend, and short term we have made higher swing highs above this one. From this point to this point, we made a higher swing high. That's uptrending behavior, so at least at the moment, most recently, had some uptrending behavior. Same in the NASDAQ. We had this big drop, move up, very minimal push down here, and then a move up. So again, short-term uptrending behavior. S&P 500, same thing. Higher swing high from this point up to here. So short-term uptrending behavior amongst a longer-term uptrend. Russell 2000 had this big drop, so it was exhibiting downtrending behavior, big drop, push up, much smaller drop, showing some lack of selling momentum, higher swing high as well. So pullback came to here, we dropped, and we have moved above that. So again, short-term uptrending behavior recently. Same thing with the TSX. Bigger drop, pullback, didn't even make a lower swing low there, and then made a higher swing high. Bitcoin remains stuck. We now have like multiple little ranges going on here. We have the big range, which is just this entire area. And I'm just calling it a range, how many touch points and all that, you can decide. We're obviously just whipping around here around this 100K mark, which we've been at for quite a while now, since late last year. And so my ultimate trade, I would say, is I want to see this break out of this area and hold. This has been what I've been talking about for quite a while. So it breaks out. So we had this little breakout, but it didn't. We want it to move above, and then on the pullback, hold outside that range or very close to it. This popped above, but there was no, the pullback just came right back in and dropped. So I want to see a breakout, a pullback, and then if it starts moving up outside of all this whole area, that's when I want to buy. That's my main trade I'm looking for. We also talked about last week, we had started to develop this little consolidation. So I was saying watch for the false breakout at the bottom. We got the false breakout. The opportunity was to go long right in here once we started moving back up. But that pretty much fizzled right away, and so we can get out. No harm, no foul, but it's also not, it did show us that there wasn't a lot of momentum there. Big false breakout, you'd kind of want to see it push back up to at least this high, try to make a breakout the other side, but it has not. That said, we may get another chance if it starts pushing back up. Maybe it pushes up toward the top of that range again, but it's pretty choppy in here, and that'd be just, kind of nickel and diamond, picking up some tiny trades. The big one I like is either it breaks out of this big area, has the pullback, go long somewhere up in here, if it starts bouncing, or we never know, if it starts dropping below this 100K mark again, we could be bouncing around in range here. If it breaks below this kind of 90,000 area, same thing. If we get the drop out and the pullback stays below this range, we're very close to it, and come back a little bit, but then it starts dropping. That's start looking potentially for some shorts. State of the market health indicators. This is an S&P 500 chart. Just kind of shows us what's going on under the hood. And they're pretty much confirming what we're seeing in the price action. It's been very choppy recently. I like to trade during easy money times. I don't care if I miss a move up like this. I want to, because it's still choppy, right? We haven't really broken out of this choppy area or anything. So, yeah, I just want to wait for the kind of easy trend to capture. And maybe we've just kind of been on the cusp with these health indicators recently. So price action pretty flat in the last little bit. Yes, we did have a bit of a pop recently, but it didn't really do anything for our health indicators. We've got right about 50% of U.S. stocks around above their 50-day moving average. That means 50% are also below their 50-day moving average. So a lot of stocks, you got some in short-term uptrends, you got the other half not. Not that the 50-day moving average is a perfect indicator by any means, but it does give us a sense of kind of how many stocks are moving up or down. This is up volume divided by total volume. It's neutral. So this is neutral. It's right on the cusp. It's easier to make money when most stocks are going up. We don't have that right now, so this is a neutral, but it's also not terrible. The up volume divided by total volume, this is just kind of showing us some extreme readings. Are we really lots of things going up? Is there lots of selling volume coming in? Is there lots of buying volume coming in? And this has just been all neutral. It's in the midpoint. We are looking for extreme readings either way up here or way down here. This one, neutral, the NYSE advanced decline line, advancing stocks minus declining stocks is a cumulative number. The S&P recently got back to its highs, and the advanced decline line right near its former high as well. So it's pretty much just kind of confirming at the moment. This is daily percentage movement of the S&P 500. The main takeaway is big down days indicate big selling. Generally better to step away for a little bit. Heightened volatility, also more indicative of a downtrend, whereas a low volatility, low daily percentage movement, more indicative of uptrending style behavior. We're in a little bit still kind of volatile, but we have recovered from this big drop that we had in late December, mid-December. So I'd say this is okay. Maybe not the kind of low volatility that I ideally like to see in just kind of a steady uptrend, but I would say this is okay. So it's pretty much kind of neutral, because this is a smiley face, but let's call it kind of half a smiley face. So pretty much just mediocre across the board. It's like everything's kind of on the cusp. It's not great, it's not bad. And what does that tell you? It means, hey, maybe trade a little cautiously, don't be super aggressive. Hey, do whatever you want, but this is for myself. Sectors on the move. Things changed up a little bit. Financials holding up last week. They were the best performer. Materials, technology, industrials, consumer discretionary, communication services, all doing kind of well over these longer time frames. These are the ones that are more toward the top of the performance list. Yeah, so that's your market outlook for this week. Again, kind of mediocre. We need to kind of something to break, either up or down, start pushing us into some positive territory. Like I said, I'm waiting for easy money environments. I don't want to trade, try to scrape out something in choppy market conditions. That said, there is big movement in a lot of stocks out there right now. So that has been kind of my go-to, is if I'm going to take a trade, it's short term right now, because I don't like the overall conditions. So it's like I don't want to really be holding too much overnight for long periods of time, just because it has been, we kind of get these big moves or gaps, or it seems kind of prone to whim at the moment, whether we're going to have a big drop or snap back higher. So yeah, I just trading a little cautiously and take from that what you will.